Welcome back to Alpha Recap. Great to have you with us for today's market wrap after the close. As always, if you have questions, you can reach us at stockalpha.ai.
Thanks, Mike. Nice to be here. Lots to unpack from the April 8th session, a day where corporate steadiness and active portfolio moves showed up together.
Totally. What really stands out here is that on one hand, companies were signaling stability, and on the other hand, managers were trimming positions. Tell us about the big dividend call.
Right. Caterpillar kept its quarterly dividend unchanged at $1.51 per share, payable on May 19th, 2026. That's a pretty clear signal that management wanted to preserve predictable cash returns rather than bump the payout.
So, from an income investor's perspective, that preserves expected cash flow, right?
Exactly. When you step back and look at this, maintaining the dividend preserved yield expectations and avoided a headline that could have shifted income flows in the industrial space.
But then we had ClearBridge, an active dividend manager, sell a holding, EQT. That feels like the opposite move.
Yeah, absolutely. ClearBridge disclosed selling EQT from their dividend strategy, citing geopolitical and industry disruption risks. So you have a company saying, we'll keep paying you, and a manager saying, we're reducing exposure because the risks look different.
Right. And the other thing is, there's a split in risk frameworks. One signaling operational predictability, the other is signaling geopolitical caution.
Yep, analysts frame that as stability versus opportunistic reduction. Both are defensible, depending on whether your priority is steady cash flows or avoiding event risk tied to geopolitics.
Let's shift to the earnings-driven moves. Some big one-day winners and losers. Hit the highlights for me.
Sure, Nicolet bank shares jumped sharply after a solid quarter. It closed at about $149, up 12.1% on the day. Onsemi had an intraday print around $66.51 and has run roughly 30.7% higher since October 2025. And on the downside, Sotera Health slid to about $14.85, down 7.2% after its quarter.
Wow. Big moves.
Big moves indeed. These are textbook examples of idiosyncratic performance. Company fundamentals and guidance drove the outcomes, not broad market momentum.
Are these momentum plays or fundamental shifts?
That's where analysts are split. Some say the quarterly results justify the re-rate, real execution improvement. Others think part of it is positioning and momentum. For onsemi especially, the sustained move since October suggested durable demand, but you still want to watch guidance for confirmation.
Short reactions.
Hold on, say that again?
Honestly, I was a bit surprised by the Nicolet move.
Yeah, that tracks. Community and regional banks can move sharply on clean beats, especially when loan trends or expense control surprises show up.
And then there was a pretty dense set of corporate filings, a real flurry of 8K activity.
Right, and this is important. Regeneron and Nurix filed Item 2.02 disclosures, which are results summaries. FactSet filed an Item 5.02 around governance and compensation. Lumentum flagged an Item 3.02 for unregistered equity sales, and Deep Isolation issued a Regulation FD notice. These filings can be routine, or they can presage material news.
Explain the items in plain English for listeners who don't live in filings all day.
Sure, Item 2.02 usually means a company is releasing financial results or a short summary of performance. Think of it as an initial snapshot. Item 3.02 is a red flag for potential insider or private equity sales that might dilute shares. Item 5.02 covers departures or elections of directors and officers, governance changes. And Regulation FD is about making sure material info is broadly disclosed, not selectively leaked.
So these can change near-term investor expectations depending on the exhibits.
Exactly. The headline is just the index entry. The exhibits, the attached statements or financials, tell the story. Some of these were routine. Others, like unregistered sales or governance moves, can be material and warrant deeper reading.
Let's talk about that Landis plus Gyre divestiture. They closed a sale of their EMEA business, but didn't disclose proceeds. That sounds like an information vacuum.
Yep, no sale proceeds disclosed creates immediate uncertainty about how to treat the cash, whether debt gets paid down, or whether there's a gain or loss on disposal. Markets tend to price conservatively into that uncertainty until the company provides the details.
And on the strategic partnerships front, Leonardo and Red 6 had a defense integration story, and Gartner named Storytech a leader, which could ripple to big enterprise vendors.
Right. Those are longer lead indicators. Procurement cycles and product adoption can support revenues over time. It's not a same-day earnings driver, but it matters for secular themes, particularly for companies like Adobe, Salesforce, and HubSpot that serve enterprise marketing and content workflows.
Quick reactions. Okay, let's pull this together. What did today's flow mean for different investor types?
For income investors, Caterpillar's unchanged payout preserved expected cash yield and signaled steady cash flow. But ClearBridge's EQT sale was a reminder that yield doesn't eliminate geopolitical or industry displacement risk. Active managers showed why they trade inside income sleeves.
And for traders and momentum folks?
Momentum and event traders saw opportunities. Nicolet and onsemi moved hard. But Sotera's drop after its quarter was a lesson in the downside risk of earnings-driven moves. Watch guidance and conference calls for the follow-through.
What about governance and monitoring investors?
FactSet's governance filing and Lumentum's unregistered sales are red flags for governance-focused investors. Those exhibits will tell you whether these are routine housekeeping items or signs of deeper change.
So what should listeners watch next week?
Read the exhibits. Distinguish company-specific catalysts from macro forces. Expect volatility where information gaps exist, like Landis+Gyr's undisclosed proceeds, and monitor forward guidance and manager commentaries for names where active managers changed exposure.
Final quick takeaways before we sign off?
3 quick ones. 1. Dividend stability can coexist with active manager rebalancing. They're responding to different risks. 2. Earnings and filings drove idiosyncratic dispersion today, so stock selection mattered more than index moves. 3. 8K exhibits are where the real detail lives. Read them before drawing big conclusions.
Perfect. Thanks, Matt. Any last thoughts?
Look, here's the thing. Markets had a mixed message today, and that's okay. It just means diligence mattered more than ever. If you dig into the filings and calls, you'll have a much clearer sense of what's sustainable versus what was just noise.
Great wrap. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening to Alpha Recap. We'll see you next time after the close.